person Sonia. On this channel, we talk about everything real estate and financing. If you're a new subscriber, welcome to my channel. If you're a returning subscriber, thank you for everything you do. I really do appreciate you, and I thank you for all your views. Okay, so in today's video, before I get there, please don't forget to share, like, subscribe to my channel if you haven't done that yet, and turn on your notification bell so every time I upload a new video, you will be the first to be notified. So in today's video, we will be talking about alternatives on actually getting to own a home without going through the traditional way. And when I talk about the traditional way, is the way we know, right? You go get them a loan from a bank or a mortgage company, or you buy a house with cash. But no, this is not you actually starting the whole process from the mortgage. You can actually go get a house starting without actually getting a lender, even though at the end of the day you still have to might be get a lender, but from the beginning you don't really have to get a lender. Okay, and this is part one of the alternatives. So what are other alternative methods you can have or you can use to acquire a home without making traditional outright purchases? So the first one is going to be rent to own. You probably heard of rent to own, right, from people or read it somewhere. So yes, that's the first one. Number one is going to be rent to own. And rent to own is an arrangement that allows you to rent a property with the options to actually buy it at a later date with a predetermined price after a certain period, or typically a few years, right? So this arrangement is done between you, the potential buyer, and the seller of that house. So if you decide, I want to actually purchase this house and I love it, and you actually want to rent, instead of just renting and renting and renting, you can actually go into an agreement with the seller and actually ask them, what do you have to do to actually own the house after some years? Okay, so that's the first alternative, and some of these we are going to be expatiating on it in different videos. But for right now, I'm just going to give you an overview of some of these alternatives. So the second one for this part one is going to be lease option. A lease option is almost like a rent to own, but no, it's not exactly, okay? Because for a rent to own, you might not have the option of not ending up taking the house if you don't choose to, or ending up paying for other things that you were not supposed to pay. But when it comes to a lease option lets you lease the property without the option to buy it in the end. So the main difference is you're not obligated to buy if you do not decide to. But a rent to own, you're obligated. So if you end up not buying it, then you have some other things that you have to deal with. Okay, so that's the difference between a lease option and a rent to own. So the number three on this list is going to be owner financing. Some people have heard of it, some people have not. But owner financing just simply means the seller acts like your lender or your borrower. So instead of going to the bank to actually borrow the money to actually get the house, the seller actually lends the money to you, or acts like the financing, acts directly in the financing of the house. So the seller acts as the lender and the financer of the purchase directly instead of you going. And you make regular payments to this seller, often with interest, until the property is fully paid. So that's another option if you don't want to go through the traditional way, which is going to your lender, mortgage lender, your bank, your credit union, or whoever you choose to go through. So that is another option. Okay, number 4 on the list is going to be assumption of mortgage. Assumption of mortgage just simply mean that you are taking over someone else's mortgage with everything in it, including the terms, the condition of how the person signed that mortgage. So if somebody already, a seller who is ready to give you that house, actually signed the contract with this mortgage lender, of course, you will end up having to go through that same mortgage lender even if you didn't want to. So that assumption of mortgage, you just assume the existing mortgage from the current owner subject to the lender's approval. So whoever lent them money to buy that house will have to actually approve you. Okay, so keep that in mind. And number 5 for this lease is going to be a gift or an inheritance. So a gift just simply means your parents, somebody, your brothers or sisters, or somebody gave you that home, right? Or you inherited it from somebody, right? Family member. So you may acquire a home as a gift from a family member, or it could be passed down to you through inheritance. And that's another way some people get a house, right? So even if you don't buy and you end up having a gift from somebody, why not? Why don't you take it? So that's another alternative of actually you owning a house that you don't actually have to go through the traditional lenders or the traditional method of we going to borrow from mortgage lenders, from the bank, or from credit unions. And that is gonna be it for part 1. Always remember, my videos are just for educational purposes. Do your research and make sure you have proper understanding of all these different ways to actually get a house without going through the traditional way. And I'm going to be continuing the part 2 of this video soon. Okay, and thank you for always listening to my tuning into my channel. Please do not forget to equally subscribe and share this video. As always, stay safe and healthy until next time.